First-time home buyers, I'm going to teach you everything you need to know about an FHA loan. Step number one, the most common question asked, how big a down payment do I need? I know that's a challenge for a lot of people. Well, in most cases, it's only a 3.5% down payment for an FHA loan as long as you have a credit score of 580 or above. If the score is under 580, 579 and below, we require only a 10% down payment. Long ago, the myths have been gone of 20% down required to buy a home. So you can come up with money in a number of different ways. One, obviously, it could be a savings. Two, maybe grandma can help you with a gift. Maybe you have a 401k or some kind of plan where you can come up with money, and it could be a combination of all these things. Maybe grandma can help you with $2,000. Maybe brother can help you with $1,000. Maybe you can come up with $10,000 on your own. A lot of ways to skin a cat when it comes to a down payment on an FHA loan. Look, a $400,000 loan, that's only $14,000 down. You could buy a home with that smaller down payment. Next, people ask me all the time about credit. Now, there's a couple of major factors that happen with credit. And one is sometimes bad things happen to good people. There are bankruptcies. Now, with a bankruptcy, 2 years must have passed since the discharge, not since you started, since the discharge of the bankruptcy. If you've had a foreclosure, 3 years must have passed. Now, every now and then there's a short sale. Doesn't happen because most people have equity today. But if you've had a short sale, 3 years must have also passed. That's the easiest guidelines in the mortgage industry is for an FHA loan. Now, you obviously need provable income to buy a house. So what we're going to do is we're going to take a look at how your income works. If you have a salary, well, that's very easy to calculate. But it does become more complicated for people who maybe have commission income or bonus income or even overtime income. So what happens is we're going to take somebody's hourly pay, if they're paid hourly, and then we're going to multiply that times 40 hours a week. We're going to calculate what that comes out to, assuming you work at least 40 hours a week. If you work overtime, what we're going to do is we're going to take the last 2 years history of overtime and we're going to average that out. It can't be you started last week working overtime and you worked 10 hours. It doesn't work like that. It has to be a 2-year history. If you get paid a bonus, you must have received it for 2 consecutive years, and we're going to average it out and put it into your monthly income. If you receive a commission, again, we're looking at 2 years income in commission to figure out what we need to do there. If you're self-employed, what we're going to do is we're going to take 2 years taxes and we're going to look at what you pay taxes on. We are not going to look at, oh, I grossed $100,000. Well, that's nice, but sometimes people write off $99,000 and pay taxes on $1,000. You can't really buy a house like that. So we're going to look at how much profit did you pay taxes on, and that's what your income is going to be. And it must be a 2-year history when it comes to self-employment. Now, what do we do if your credit score is too low? Well, believe it or not, an FHA loan, you can do a 500 FICO score, but the truth is nobody gets approved. If you have a 550 with 10% down, there's a chance you could be approved if you have a good and low debt ratio, meaning you're not overextended, because sometimes that's why people have bad credit to begin with. So we're going to take a look at that. What do we have to do as far as credit? And we have credit repair experts. Sometimes we can look at it as, oh, this is a quick fix. We've been doing this a long time. We know what to do. So what I want you to do is don't get down on yourself. Credit can be fixed. And if that's your challenge, just reach out. I want you to reach out to the Fire Your Landlord real estate or mortgage expert, and they're going to teach you what you need to do to raise the credit. If your income is not there, well, sometimes you could have a co-borrower, and that could raise the income. Now you have 2 incomes or maybe even 3 incomes to look at, and we'll add them together so that you can qualify to buy a house. And lastly, the biggest challenge for people is down payment. Now, with FHA, I told you in the beginning of the video, it's not a big down payment, but I also know that if you need a dime but don't have 10 cents, it might as well be $1 million. We have solutions. It's not a standard FHA loan, but there are down payment assistance programs. That's for another video. Okay, here's the most important part why just about everybody is watching this video is, Chris, how much do I qualify for? Well, of course, we understand that. So what I'm going to tell you is there's two things. Number one, there's a 47% housing ratio to your gross income. And there's 57% if you have debts on top. So you must meet both guidelines. If you have too much debt, well, then you have to lower the house, how much you qualify for, a little bit lower so you qualify on both ends. So what you do is you take the gross income, assuming you have a job, and you put it on a piece of paper. And if there's two borrowers, add them together, obviously. Now, if you're salaried or commissioned or, you get bonuses, average that over 2 years. And there's none of this, I make about. It has to be exact. We work with super exact numbers. If you're not sure, grab your pay stubs, reach out to the Fire Your Landlord realtor or lender, and we'll help you calculate it if you're not sure. It's not complicated, but if you're not sure, better to be safe than sorry. We'll get the answers for you, and together, we're going to fire your landlord.